What's up guys, and welcome back to Wall Street Millennial. Today we're going to go over some of the biggest gains and losses on the Wallstreetbets forum of this past week, including one person claiming a monster $3.4 million YOLO on Shopify. If you like these videos, make sure to leave a like and subscribe, and leave a comment in the comments section below if you have any opinion on these trades. With that being said, let's get into the video. First up, we have the user Toilet Philosopher, who made more than $31,000 in a single day. Since August, he's up more than $95,000, going from only $5,000 in his account to having a six-figure portfolio. Most of his gains were from a well-timed play on Gores Holdings 4 Inc., ticker symbol GHIV. Gores Holdings 4 is a SPAC put together by the Gores Group, which is an investment management firm in Beverly Hills that focuses on private equity-style investments. In September, it was announced that United Wholesale Mortgage would merge with Gores Holdings 4 to take roughly 6% of the company, or about $500 million worth, public. United Wholesale is a wholesale lending firm that competes with companies like Rocket Companies. Rocket Companies recently went public, and after doing so, quickly rallied almost 50% before cooling off. It now trades at roughly the same level as the IPO price. The deal was known to be expected as early as September, with expectations that it would happen in the fourth quarter of 2020. However, when it was actually announced, the stock jumped 27%. Our friend, the Toilet Philosopher, was lucky enough to be holding calls on the stock at the time. This allowed him to make $48,000 off his investment as they became in the money. Toilet Philosopher also holds call spreads on Palantir Technologies. His position is 10 contracts of 30/50 strike call spreads expiring in May of 2021. Unfortunately, after the initial pop, Palantir has not been doing particularly well. Ever since Citron Research called Palantir stock a casino, Palantir has slowly been bleeding out its initial gains. This has caused our friend Toilet Philosopher to lose on Palantir, although to be honest, it could have been much worse. Next up, we have user Financial Touch Trades, who posted a screenshot of his portfolio down 97.7%, or more than $30,000. He started off with $30,000 from his Ameritrade account that he put into Robinhood for YOLOs, later adding another $15,000 to bring his total investment up to $45,000. He had some initial success in the first 3 weeks, bringing his account up to a peak of $79,000, but he didn't take profits, hoping to make another successful YOLO to bring his account even higher. In search of a new YOLO target, he turned to the Wallstreetbets forum and saw countless posts showing gain porn from Palantir, which has increased more than 150% since its direct listing in September. At the time he found out about Palantir, the stock was increasing 10% almost every day. He thought the stock had strong momentum brewing, so he started YOLOing into weekly calls. Despite Palantir's strong overall performance, his calls would always expire about 5% out of the money. In the end, he lost about $30,000 on Palantir weeklies, but instead of cutting his losses and calling it a day, he YOLO'd his last remaining account balance into more Palantir calls and lost it all as the stock traded sideways over the past month. He laments the fact that he lost money on two separate YOLOs where he did the exact same thing, buying weekly Palantir calls. Usually, people learn from their mistakes, with the noted genius George Bush explaining that after being fooled once, you can't get fooled again.
They fooled me, we can't get fooled again.
While this $43,000 loss is gut-wrenching, at least this Wallstreetbets user will not be forced onto the streets after this financial hit. He lives in an inherited house, so he doesn't have to make mortgage payments, and he makes steady income from owning his own business. But he regrets YOLOing all his money down the drain instead of vacationing in Hawaii or starting a new house build. But not all is lost for this Wallstreetbets user. He also owns some 23 strike calls from FireEye expiring December 31st through January 15th. FireEye stock has soared 70% over the past month, bringing the share price up to $22.94, just 6 cents away from the Financial Touch Trades' $23 strike price. So if the stock continues on its move upward, he has a chance of making back some of his losses. FireEye is a cybersecurity company whose stock has benefited following cyber attacks against US government agencies and businesses. These attacks will raise awareness of cybersecurity issues and potentially drive further adoption of FireEye's cybersecurity solutions. Good luck on the FireEye calls. Next up, we have user Arroyo99, who got lucky today with Amazon calls. He held out of the money weekly calls with a strike price of $3,220. Today, Amazon went from below $31.80 to above $32.80, crossing that magic threshold of $32.33, his break-even price. Whenever a stock goes up above the strike price, the delta of the option increases dramatically, and the gains on the option start skyrocketing. For Arroyo99, this means a very lucky 372% gain. This gain in Amazon seemingly came out of nowhere, with no market-moving news or events. It was a relatively quiet day in other parts of the market too, with the major averages up modestly and no major coronavirus or stimulus news of note. However, with big-name tech stocks like Amazon, sometimes all you need is a little intuition to make a lot of money. Many Wallstreetbets users, like this one, believe that subconsciously, when you watch the markets for long enough, your brain starts to find patterns and trends that you don't even realize. Leave a comment below on whether or not you think this is actually the case. Next up, we have user TallyDart, who posted a screenshot of his Robinhood portfolio tanking 82%, or almost $12,000 over the past year. He started trading on Robinhood right at the beginning of the pandemic. He bought calls as the market was tanking, buying high and selling low. After this, he was able to make back some of his losses with a long position on Aurora Cannabis, a volatile marijuana company that skyrocketed 200% in May after they reported earnings that beat analyst expectations. He then made some more tendies by rolling his profits into calls on TQQQ, the 3x leveraged Nasdaq 100 ETF that has returned over 100% this year. Buying options on 3x leveraged ETFs is extremely risky because the implied volatility is so high. After making these quick gains, he became overconfident, thinking he was a high IQ. So instead of taking profits, he continued YOLOing on TQQQ calls, as well as JNUG, the 3x leveraged gold miners index. JNUG has been extremely volatile, and unfortunately for the Wallstreetbets user, it tanked more than 35% from its peak in August. Unsuccessful weekly YOLOs on these ETFs caused his account to give up all the gains and then some. In spite of his losses, he never gave up. He did one final YOLO on Palantir calls, which spiked as it became a meme stock on Wallstreetbets. He again failed to take profits on these gains and sold his calls at a loss as Palantir stock pulled back after its incredible run. After losing more than 80% of his portfolio on options trades, this user is finally throwing in the towel and switching to owning stocks. With his last remaining $2,600, he is backholding some shares of Palantir. Palantir stock would have to rise 400% for him to make back his losses. This seems unlikely in the near future, even for Palantir. Next up, we have another Amazon gain, this time from user Roman Immigrant. He also used weekly out-of-the-money Amazon calls. With Amazon now significantly above his break-even price, he is up more than 1,000% in only one day, or $3,200 off a base of only $300. After seeing so many losses on the Wallstreetbets forum, seeing a gain like this magnitude, many people might want to know how he did it. He says that all you have to do is make enough attempts, and eventually you will hit a large gain. Luckily for all of us, there's more from where this genius insight came from. It seems like Etsy and FedEx are the next plays for major tendies. Next up, we have a nice 575% gain on GameStop. GameStop has been both a big money maker and a big money loser for investors and traders in recent months, with developments in activism and fundamental business changes making wild swings in stock price. However, this past week, GameStop made a monster move to the upside, almost 40%, from $15 to $20 per share. Among the news for GameStop is recent insider buying in the stock, frequently seen as a bullish sign from management that they are confident in the business's prospects. This, combined with perfect timing, allowed user OK Confidence to make 390 and 1,440% gains on separate trades. GameStop is one of the most popular meme stocks right now, with overwhelming support for diamond hands. Any suggestion of taking profits is promptly disregarded, and this eToro user is planning on holding his positions until expiry. Given the size of his unrealized gains so far, choosing the name OK Confidence seems to reflect the right strategy when it comes to GameStop. Let's wrap up the gains post with an absurd $500,000 gain on Shopify. Options trader Dixie Normus YOLO posted a screenshot showing a 20% gain on 2,400 shares of Shopify. At a share price of more than $1,300, the cost basis for this trade was more than $3 million. Only a boomer investor would have that much money and use it to make a YOLO with stock alone. That's the first fishy thing about this post. The comment section then proceeds to rip this investor for having this much money in the first place, and then thinking a 20% gain counts as a YOLO. But it turns out that this post might not even be real. Based on the amount of money in the trade and the lack of engagement of the OP in the comments section, it's likely that this is a paper trading account, which would make this post a scam. Unlike some of the other scam posts we've seen on this channel, this one didn't even claim monster gains. Next up, we have user Zubles, who YOLO'd 90% of his Robinhood portfolio into Moderna stock and has recently lost more than 30% of his position. Moderna has been on a tear this year as they have developed a COVID-19 vaccine. It reached its peak in December after the FDA gave it a stamp of approval, but in the past few weeks, shares have been under pressure as investors fear the company's $44 billion valuation is a bubble. Our friend Z Bubbles pulled off an impressive task of buying exactly at the top. His average cost was $177.84. If you look at the Moderna chart on Google, the peak is only $169, almost $10 below his average cost. The Google chart only displays the end-of-day values. This means he not only bought on the highest day, he bought at the intraday high. So at some point on December 8th, Moderna shares peaked at $177.84, or possibly even higher, and immediately fell $8 down to $169 per share by the end of that trading day. Afterwards, his shares continued to fall and are now down roughly 34%, costing this WallStreetBets user $10,200. He laments the fact that the news flow around the Moderna vaccine remains positive even as the stock is falling. Many WallStreetBets users criticize Z-Bubble's horrible timing and imprudent risk management by dumping 90% of his portfolio into Moderna stock. It is generally unwise to put your entire portfolio into a single position, as this dramatically increases the variance of your portfolio. While the Moderna vaccine is a huge success and the company expects to produce more than 500 million of them in 2021, Moderna's stock has already priced this in, as it has risen over 500% since the beginning of the pandemic. This experience just goes to show that it is not just good enough to hop on the bandwagon of a new meme stock. If you want to make real tendies, you have to identify new trends in their early stages and invest in them before they become meme stocks. Luckily for our friend Z Bubbles, his position is in stocks, not options, so he hasn't lost everything. If he holds his position long enough, it is still possible that Moderna stock could recover and he can make back some of his losses. We wish you luck. Alright guys, that wraps it up for this video. If you liked the content, do me a big favor and hit the like and subscribe buttons. If you have any recent gains or losses that you think rival the ones in this video, let us know in the comments section below. In the meantime, we'll see you in the next video. Wall Street Millennial, signing out.